Before we begin, make sure you subscribe, like, and share this video, because the strategies in this video can genuinely change how you think about money in Australia. Introduction: most Australians work hard every single day, but very few truly understand how money works for them. Saving alone is not enough anymore. Inflation quietly eats away your income. Your savings lose value, and without investing, financial freedom becomes harder each year. The good news is this: you don't need to be rich to invest. You don't need to be a financial genius. And you don't need to take crazy risks. What you do need is the right strategy, especially one that works specifically in Australia. In this video, I'm going to break down the top 5 investment strategies for Australians. These strategies are practical, beginner-friendly, and used by successful Australians to build long-term wealth. So watch till the end, because the last strategy is the one most Australians completely ignore, and it could make the biggest difference. Let's start with one of the safest and smartest ways to invest in Australia: ETFs. Instead of picking one stock and hoping it performs well, ETFs spread your money across the entire market. Meaning you're investing in Australia's top companies like banks, miners, healthcare giants, and retail leaders all at once. If one company struggles, others balance it out. Another major advantage is low fees. Traditional managed funds charge high management fees, but ETFs are cost-efficient, allowing more of your money to stay invested. ETFs are perfect for beginners, long-term investors, and busy people who don't want to watch the market every day. Investing consistently over years and letting compound growth do the work. If you're just starting your investment journey, ETFs should be one of your first considerations. Real estate offers capital growth, rental income, and long-term stability. Unlike some investments, property is tangible. You can see it, rent it, and improve it. Australia's population continues to grow, especially in major cities and expanding regional areas. This creates constant demand for housing. Smart property investors don't chase hype. They focus on infrastructure development, JOB, growth areas, rental demand, and long-term population trends. Another powerful advantage is leverage. Property allows you to invest with borrowed money, meaning you control a high-value asset with a relatively smaller deposit. Additionally, Australian property investors benefit from tax advantages like negative gearing and depreciation benefits. Property investing is not about getting rich overnight. It's about steady growth, patience, and holding assets long-term. For Australians who prefer stability and tangible assets, property remains a powerful wealth-building strategy. Strategy number 3. Maximizing superannuation. Superannuation is one of the most underrated investment tools in Australia. Many Australians ignore it because retirement feels far away. But that's exactly why it's so powerful. Super is tax-efficient, professionally managed, and designed for long-term growth. Employer contributions already give you a head start, but smart Australians go further. Making voluntary contributions can significantly boost your retirement balance over time. Thanks to compounding, Small additional contributions today can grow into hundreds of thousands of dollars in the future. Choosing the right super fund is equally important. Fees, investment options, and performance vary widely between funds. Younger Australians can often afford growth-focused portfolios, while older investors may shift towards more balanced options. The key takeaway is this: super is not just retirement money, it's a powerful investment engine when used correctly. Ignoring super is one of the biggest financial mistakes Australians make. Strategy number 4: investing in global markets. Many Australians make the mistake of investing only locally. Australia is a strong economy, but it represents only a small percentage of the global market. By investing globally, Australians gain exposure to international technology giants, global healthcare companies, emerging markets, innovation-driven industries. Global ETFs make this easier than ever. You can invest in US, European, and Asian markets without opening overseas accounts. This strategy reduces risk through global diversification. When one economy slows down, another may be growing. Currency exposure can also work in your favor over the long term. Australians who invest globally position themselves to benefit from worldwide growth instead of relying on one economy alone. Smart investors think beyond borders. It's not about chasing trends. It's about consistency and patience. Successful Australian investors invest regularly, regardless of market conditions. They understand that markets rise and fall, but long-term, they grow. Dollar-cost averaging allows you to invest consistently and reduce the impact of volatility. This strategy removes emotion from investing and builds discipline. Wealth is not built in one year. It's built over decades. Australians who stay invested, remain patient, and avoid panic decisions almost always outperform those who try to outsmart the market. If you found value in this video, don't forget to subscribe, like, and share it with someone who wants to build wealth in Australia.